Good morning, everyone. How are we doing? How are we doing? How are we doing? What's happening? What's happening? What's happening? Good morning, good morning, good morning, good morning, good morning. How is everyone doing? We're live. Please do well to share the link with every single person that should be here with us. We're going to be concluding our series. We've been going through this series since I think 3 weeks ago or 4 weeks ago. We started this. I think we started this series at the beginning of this month, and we were not able to conclude last week because I was very occupied on Monday, so I couldn't do this with you guys on Monday. So, are we ready? Are you guys ready? Are you guys ready? Are you guys ready? So, how is everyone doing, and how is the market? Mahmoud Mohammed, good to see you. Good morning. How are you, and how has the market been? Daniel Friday, how are you, and how has the market been? Just share with me a brief, of your experience with the market last week. Come on, guys. Let's know how we are doing. Let's know how we are doing. How is the market treating you guys? Okay, Mohammed Mahmoud said it was good, especially live trading with you on Thursday. Okay, yeah, true. If you guys made live trading with us on Thursday, you guys left a lot of money. You guys just abandoned money on the table. Okay, every Thursday we come on here to trade with you guys live. It's always an amazing time trading. For the past 4 consecutive periods we've come on here to share live, we've always hit profit consecutively for 1 full month. That's a record, man. Every single Thursday, we're making money live on this channel. Okay. Wakama, yes, I'm good. Good morning. You're welcome, Mama Straight. Good morning. Good morning to you too. Somebody said for me it was really busy, but did only took Thursday trade. This your English. I don't understand, Daniel. But all the same, I think you're trying to say that you only traded on Thursday with us live. Good to know that. Okay, Mahmoud said looking forward to this Thursday. Yeah, this Thursday again we go live. One of our senior analysts is coming on board to trade with us live again. I won't be the one taking this week's session, but trust me when I say this guy coming on is a veteran trader. He's a trader. He has been trading for almost close to the same number of years I've been trading because we practically started trading together. He's coming on live here again on YouTube to share with us, to trade with us live. Okay. Who else? The market has been nice, making money all the time. Yeah. The market is always nice to us here at the Trade Wave Academy. So good to see you guys once more. Please, if you have not been following this series, this retracement and reversal series, let me know. If this is your first time following this series, let me know. This reversal and retracement series. This is part 3. If you missed part 1 and part 2, it will do you so much good to go back and watch those videos. Okay, it's still on this channel. Go to the live session of this YouTube channel. You'll see all the live sessions we've had. Everything is recorded. It's still on this channel. So go ahead and watch part 1 and part 2, because if you don't watch part 1 and part 2, it might be a bit difficult to really grasp the things we're teaching. I'm not saying you should go off. Don't go off. Okay, you can still catch up after today's morning session. After watching today's morning session in your spare time, go ahead, watch part 1 and part 2 so that you can catch up. Okay. Good to see you. Said that he can. Good morning. Yeah. For those of you that don't know, I recently transitioned into fatherhood. So I'm a father right now, so when I speak, I'm speaking now as a father. Yeah, Kubilo, good to see you. Today is your first time. Amazing. Oluwatosin Adeoye, today is your first time too. Good to see you. That means you guys have been missing a lot. If this is your first time, seriously, you have a lot of catch up to do on this channel. There are three things we do every week on this channel. Number one is our weekly analysis on Sunday afternoon. Every Sunday afternoon, you come to this channel, you will see our weekly forex forecast. I forecast the trade, I forecast the market, 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 I forecast the market. You guys hear me? Good. Sorry, we're back. We had a network glitch, but we're back now. Can you guys see me? Can you hear me? Can you guys see me? Can you guys hear me? Can you guys see me? We are back. We're back. We're back. We had a very in a very brief network glitch, but we're back now. Okay. Thank you for the congrats. Somebody said I definitely still can catch up despite missing the first two classes. Yes. Miami TV, you can actually catch up. Good morning, good morning. Somebody said, please, where is your school located? I want to register to your platform. Our office, which is our training floor, is actually in Abuja. But however, currently we're not running any physical trainings because it became limiting at some point. So we stopped doing physical trainings. We're only doing online. So our training platform, everything is online. It's a well-structured training platform. We meet, twice every month, brush up, do follow up, forex, do mentorship classes, master classes, and all of that. We also have pre-recorded classes, over 40 videos that are not anywhere on YouTube. They are not anywhere online, only in our school. So even if you join, you don't need to attend any physical class to learn from me, to learn from my team. You can always register online, okay? But our office is actually in Abuja, okay? Okay, somebody say yes. Last Thursday trading with you was yeah. A lot of money was made last week. Last week was amazing. Good morning. So let's continue from where we just stopped 2 weeks ago or 3 weeks ago, thereabout. So we've been discussing about retracement and reversal. And for those of you that have not been following, let me just do a very quick catch up for you guys. So we have been able to establish the fact that a reversal is not a retracement and a retracement is not a reversal. We've been able to establish the fact that when a market looks like is retracing most of the time, what people don't understand is sometimes the market is actually reversing and not really retracing. Okay, so the confusion for a lot of people is that they don't know when it is a reversal and they don't know when it's a retracement. Okay, so when they see a reversal happening, they assume it's a retracement. Some people see a retracement happening, they assume it's a reversal. So either ways, you need to learn, you need to understand how to differentiate between them so that you can actually know how to distinguish between them. And I've been able to establish three different methods, three ways to identify reversals and retracement. I've been able to handle two ways. Number one, I think we talked about was the price action method, where we talked about support and higher highs and higher lows, no support and resistance, higher highs, or let me just put lows and highs. Okay, I taught you how to recognize higher highs, higher lows, and when not to be tricked, because it's very tricky. Okay, a lot of times retracements can look like reversals, and a lot of times reversals can look like retracements. So I taught you guys how to identify it, very excellently well, and not to be fooled to assume, interchange, one for the other. Okay, I also went ahead to teach you guys how to do that with Fibonacci, the Fibonacci method. I taught you guys how to use the Fibonacci to identify a reversal and a retracement. The Fibonacci is one of the best tools you can learn how to use in forex trading. Okay, and I was able to teach that excellently well in part 2. So this part 3 is where we'll be talking about the moving average method, how to spot a reversal and how to spot a retracement using a moving average. Okay, now let's go straight into the chart. I'm about to share the chart right now. Hope you guys are following. All right, I can see a question on the chart. This is the link for the person asking. This is the link. Okay, so for the person asking, this is the link right there. I just posted it there. I've pinned it, so in case you want to register, that's the link. Okay, so back to what we're teaching. So let me go ahead and open the chart. Okay, anyway, before I open the chart, let me just draw some things for you here. So we're able to establish that a reversal is a prolonged retracement. Okay, every reversal starts as a retracement, then ultimately becomes a reversal. But not every retracement ultimately becomes a reversal. For instance, if this every healthy trend has highs and lows, this is what you call a typical uptrend. Okay, so you have a high, a low, a higher high, a higher low, a higher high, another higher low. Okay, this is a healthy uptrend. Okay, and when this trend wants to reverse, what you typically see is that it begins to create lower lows, lower highs, lower lows, lower highs, lower highs, lower lows. Okay, typically this is what a trend looks like, and we're able to establish the fact that when a trend actually wants to start reversing. Oh my God. When a trend wants to actually start reversing, one of the many things that you would definitely see is the fact that if this is we establish that this is what we call impulsive move. From here to here is what you call an impulsive move. Then we have the retracement. Okay. At any point, this retracement now breaks and closes below this previous low, then we have a retracement turned reversal. Okay, at any time the market now ultimately fails to create a higher high, then we can clearly say that this market has reversed. And I went ahead to tell you, and I was able to mention that very clearly, that this patterns is based on time frames, the particular time frame you're using. Okay, if for instance, let's assume you want to trade on a 1 hour time frame and you're trying to spot these reversal patterns, you should not be spotting them on that same 1 hour time frame. Your 1 hour time frame will probably be for entries or for confirmations. If you want to trade on a 1 hour time frame, your eyes should be on the 4 hour time frame. That's where you should be looking out for these higher highs, higher lows, and real and reversals and retracements. Because if you've not confirmed it on a higher time frame, it won't be wise to start trading it on a lower time frame, which is a 1 hour time frame. So at every point in time, make sure that you're doing your analysis, you're looking for your bias on a higher time frame, then you go ahead and trade it on a lower time frame. So this reversal and retracement pattern should be spotted on a higher time frame before you go ahead and start trading it on a lower time frame. I hope that makes sense. Okay, now let me go ahead and teach you how to use the moving average to, identify which of them is a reversal and which of them is a retracement. Are you guys ready? Are you guys ready? Are you guys ready? Now let me go ahead and how to use a moving average to spot retracement and reversal. Okay, how to use a moving average to spot retracement and reversals. Okay, good. Now there are three major methods that I will be teaching you, and these three methods are what I've typically used as far as the moving average is concerned. These are three methods I've clearly used to know which one is a reversal and which one is a retracement. Now, before I actually start off teaching you using moving average, let me not assume that everybody knows a moving average is, because I know I'm guilty of making the assumption that everybody understands these basics. But you'll be shocked to find out that there are some people here that don't even know what is a moving average. If you're here and you don't know what is a moving average, let me know. Just type one on the chat. If you don't know anything about moving average, type one on the chat. Type one on the chat. If you're here, if you don't know anything about moving average, you've not used it before, type one on the chat. One. Type one on the chat. If you don't know what a moving average is, type one. Anyone. If this is your first time hearing about moving average, or you've not used it before, you don't know how to use it, type one on the chat. Okay, you see what I'm saying? I know some people here have not really used it before, and there's no shame in that. There's no I'm not trying to trying to shame you, anything like that. I just want to know where to start from. Okay, so a lot of people here don't even have not used moving average. That's fine. Now, moving average is simply a tool, an indicator tool used on the chart to give you the average value of a particular number of candlesticks. For instance, let me share my chart again. For instance, this is, let me use GBP USD for example. Let me use GBP USD. Now, this line you're seeing right here, this red line you're seeing here is what we call a moving average. Now, every moving average has a particular feature called period. A period is the number of candlesticks used in the calculation of the moving average. For instance, this one right here this is a 50 period moving average. You can see here 50 moving average. Okay, the input, as you can see, the length of it is 50. Okay, that's the period. It simply means that this line calculates 50 candlesticks and gives you the average price of them, then plots it on the chart. Okay, you guys are conversant with normal let me just do some drawing, okay, so I can carry everybody along. I love to carry everyone along so that nobody's lagging behind. Okay, so let's say we put a 5 moving average. Okay, want to use a 5 moving average. This, remember that this is price. Every chart is a plot or a graph of price against time. Okay, price against time. So we have this 5 candlesticks. This 5 candlesticks. What the moving average does is that it calculates the price of this and gives you the average value of them and plots it as a chart. You understand? It plots it for you as a line. Okay, so in this case now, this line here is the moving average. Okay, I think that's a good enough explanation. Now, somebody is asking, can I get a video on how to use Fibonacci to spot reversal? Yes, it's on this channel. is on part 2. Go to the live session of this channel, you'll see it there is on part 2. Okay, so this is what a moving average, this is just typical explanation of a moving average. Okay, so it's used to just plot, give you the average, price of a particular currency against a particular number of time frames. Okay, that's it. Using moving averages to spot reversal patterns and retracement patterns, there are three things that are worthy of note. Number one is what I call a, you can call it moving average bounce. Every healthy trend, now let's go to the chart. Every healthy trend has a particular moving average that it usually bounces off. There are certain period moving averages that are very, 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 very popular in the market, like the 20 moving average, the 50 moving average, the 100 moving average, the 200 moving average. Most professional traders, hedge funds, big banks, Swiss banks, Commerce banks are using moving average. They use moving averages for the analysis. That's why it's a very popular tool. It is very popular because most people use it, and because if you know anything about forex, what most people have their eyes on is actually what works. The reason why support and resistance works is because people are actually conversant with support and resistance. That's why it's actually working. It's not magic. There's no magic to it. Okay, anytime any particular tool that most people use in the market, it tends to work because most people are using it. That's the same thing with moving average. Okay, so every healthy trend is always bouncing off a particular moving average. Most of the time from the 20, from I'm telling you from experience now, from the 20 moving average. Now, if you look at, let me remove this 50 moving average. Now, if you look at every single trend, you'll find out that it's usually bouncing off the moving average. For instance, we have this one right here. Let me shift this. We have this right here, down, bounced off here, bounced off again, bounced off again, bounced off, bounced before it broke. Then it started bouncing off it again, bounced off here. So every single trend you see, healthy trend, is usually bouncing off a moving average. I'm using 20. Some people use 25, some people use, but I just use 20 because I don't want to confuse myself. I don't want to put plenty indicators on my chart. Okay, now look at this one too. Look at this one. Came here, bounced off, broke through, bounced off again, broke through, bounced here. Now let's look for another trend. If it's not bouncing off the 50, it's bouncing off the 20. Let me put 20. Let me put 50. 50. Sorry. Just look at it. Just look at this. Just look at this. Just look at this. If I keep scrolling back, I hope you guys are looking at, so I don't have to keep spotting it out. Every healthy trend is bouncing off a moving average. Let me remove this 50 so you can see this one clearly well. So you can see here, bounced off here, came here again, touched, ranged for a while, bounced, bounced here before it now broke through. Now, one thing you need to know about moving average is that they also serve as dynamic support and resistance zones. Okay, dynamic support and resistance zones are zones in the market where there are possible support and resistance, but it just keeps moving. It's not like the same way where, for instance, this is a support, this is a resistance. Sorry, you know that this is where the resistance is at this level, 1.1625. It can't change. This chart can suddenly move itself somewhere else. But for a dynamic support and resistance, it keeps moving. Okay, that's what moving averages serves as. Now, How to know when a market is simply a resist a retracement and not a reversal is through a bounce. For instance, let me give you an example. Let me give you an example. Let me just look for another chart and give you example. I want to look for charts that are usually trending. Usually trending. Let me use USD JPY. Euro JPY. They are always trending. Good. So let me use 1 hour for this. Now, for example, this area of this chart. Let me delete this. Good. Are you guys full? Are you guys seeing my charts? Are you guys seeing my chart? If you're seeing my charts and you're following, let me know on the chart that you guys are following. Okay. Because I want to. We are doing practical now. Okay. Now, for instance, we are seeing this on a 1 hour time frame. Moving average, unlike Fibonacci and price action that I taught you guys on how to spot reversals and retracement, you can use this one on the particular time frame you want to be trading. So you don't need to look for the bounce on a higher time frame. You understand? You don't need to look for the, for instance, this is 1 hour time frame. I don't need to go to 4 hour time frame to look for any to use moving average for anything. I can use it on a 1 hour chart and still trade it on the 1 hour chart. Okay. Okay, good. I can see you guys typing yes. Good. Now, for instance, you can clearly see that this is a healthy trend. A blind person looking at this chart knows that this is a downtrend. There's no magic to it. This is simply a downtrend, simple and short, downtrend. Now, you will notice that this downtrend has come close to this 20. This slimmer moving average is 20. This bigger one is 5. Let me remove the 50 so it doesn't confuse you. I use the two of them because I've become quite proficient in using both of them, but not to confuse you, let me just use 20. So this line on this chart right here is 20 moving average. Should I make it thicker? Okay, let me make it thicker so that it's you guys can see it well. Good. So I think it's better now, right? It's looks, yeah, it's thicker. Good. So let's go. We can see that the market came close to this 20 moving average and it bounced off. When the market comes back to this moving average again, look at what happens. You can clearly see that when the market came to this place, you are seeing that a wick was formed. This is telling you that this is a possible resistance. Anytime the market gets to moving average, it always reacts. It doesn't just go to, especially 20, 50, 100, and 200. It always reacts. If you look at this on a 15 minutes time frame, look at this red candle. This thing you're seeing, this red candle, red engulfing candle right here, is where that resistance happened on the 1 hour time frame. That's where you're seeing this week. Okay. Now, when the market shows signs of bouncing from this moving average, is a great indicator that a retracement is actually happening. That is telling you that this moving average right here is a possible high level possible dynamic resistance zone. So look at now, what happens. The market goes up off it, and let me reset this back. Good. And you can clearly see that the market was not able to stay way above this moving average right here. You can see the immediately just 2 candles above it, it's reversed all the way back down. It gives you another lower low. Again, let's see what happens again when the market comes back to this. Look again. When the market comes back to this moving average again, what do you see? Red candle, resistance, dynamic resistance. Then it bounces it off again. Now, the idea of using this particular tool for a retracement is to keep you guided, so that when just because you see a blue candle doesn't automatically mean that this trend has changed. So what the moving average is for is to follow the trend. So provided that we don't get a break above this moving average, we can clearly say that we are still on a downtrend for this particular chart. Okay, so what a moving average is used for is for following the trend. So provided we don't get a break and close above this moving average, we can clearly say that we are still on a downtrend. Okay, that's for you to know that this market is retracing, it is not reversing. When the market now becomes a reversal is when we begin to see break and close above it. Now, the terminologies I'm using is very, very vital. I don't just say break, I mean break and close above it. For instance, let me type number two. This is number two thing you need to know on spotting support and resistance. Okay, bounce. I've already mentioned bounce. I've explained what a bounce from moving average is for you guys. Now, talking about break and close. That's another future. Break and close. Break and close. That's another future. Now, how to know that this retracement, this thing is no longer a retracement and it has now become a reversal, is when we begin to get breaking and closing above this. That's when we can now say that this downtrend has ended. We're about to transition into an uptrend. Let's see how it happens on this one. So how to trade this is very simple. You guys will pay attention. How to trade this is very simple. You simply just observe it. When the market comes back to a moving average, you observe it and see whether there is any significant reaction on that particular time frame. In this case, you can see that this is a 1 hour time frame. The market came, there was no wick. Unlike these other ones we saw here, when the market came, the candle couldn't even close on top of it. It came back first time. We saw this wick above. We saw this wick here. Saw another wick. So the market couldn't break and close above it. In this other one too, this is what we saw. The market came here. This first week shows us this first one, this one right here. This week, this one that looks like a doji with a wick above it, shows you that at least there's a reaction here. The market actually reacted from this zone, showing you that there is a possible resistance from this zone. Before the market now went above it, we got an engulfing candle and the market crashed all the way down again. Okay, this other one too, we see this week. The market got the price got very close to the moving average. We saw this week, showing you that there's a possible reversal. Now, there's this video I did on this channel on, I think the video is how to read candlestick, how to interpret candlesticks correctly. Please go, I beg you, go and watch that video. The most important part of every candlestick is the wick. If you've not learned anything about forex, learn this one I'm telling you, and never forget it in your entire life. This is what changed my trading. The day I realized that the wick of a candlestick is more important than the body, is more important than the open price, than the close price, than the the candlestick, the body of a candlestick. The wick is the most important part of every candlestick. Okay, so at every time, pay attention to the wick. So that video is on this channel. The name of the video is how to interpret candlestick correctly. Like, you need to scroll down. I think I posted that video sometime last year, so you need to scroll down like very well on my channel to watch that video. But please watch it. Go and watch it, guys. That video will teach you a lot, because a lot of people don't even know how to interpret candlestick, unfortunately. So okay, so let's go. So let's go back to where we are. So we can clearly see here that the market didn't give us any significant reaction. And going forward, we now saw this red candle break and close it, give us an engulfing pattern on it. and then the market kept crashing down. Now, this place, this let me scan this. This place we are seeing this break and close right here. Most times, what happens now? I'm teaching you guys. This is typical candlestick reading. How to interpret candlesticks. I usually tell you guys many times again and again. If you're trading if you're trading, for instance, a reversal candlestick pattern. Typical reversal candlestick patterns are, and engulfing patterns. What's it called? What's the name of this other one that you guys like so much? Double top, double bottom. Those are typical reversal candlestick patterns. Most times when you are trading those kind of patterns, what you need to understand is that only one instance of it is not enough to establish a bias. What I mean by that is, for instance, that we saw this candlestick here and you decided to, okay, a reversal is likely happening because we get a break and close. Only this one instance is not enough to complete that bias. That's why it's always necessary to always, at every point in time, wait for a confirmation. In this case, we didn't get the confirmation because immediately we saw this break and close. What I was expecting to see next is that at least 4 or 5 other candles would close above this moving average comfortably, and we're not seeing any downward pressure. But in that case, we didn't get that here because this candle closed above it, and immediately we got got a bearish engulfing pattern close below this moving average. And we can clearly see, look at these wicks. That's why weeks are very important, man. Look at these weeks. Every single week following it is showing you that there is downward pressure. The market came here, bounced off again, came back, bounced off again, came back, tried again. We saw this week, we saw another week, we saw another week. Then the market tried again for the very last time. We saw another long week followed by a red candle. This shows you that we are still clearly on a downtrend. When the market finally reverses, in this case, you will see how I'll show you the patterns following it, and you will see the very difference. Okay, now let me go ahead and now look at this. Now look at this, look at this, look at this. Now let me pull this one off. Now you can see right here that when the market came to this point on the 1 hour time frame, there was no resistance. Remember, I told you that when to know that there is that this dynamic resistance is possibly not going to hold is when there's no significant reaction on it. So you can see here that when the market broke and closed above this moving average, there was no long wick. That tells you that the resistance here is becoming a bit weak. And even after the market closed, we are not seeing any long red bearish candles. We're seeing this market clearly giving loss. In fact, 2 blue candles. If we get another 2 blue candles, I can clearly say that this thing is no longer a retracement. We're actually reversing. The market is reversing at this point. So let me go ahead and look at what we get. Now, at this point, is you can clearly say that this market has reversed, because let me put a 50 to confirm. Most times I do, that's why I use 50 and 20 moving average. If you do this on a 20 moving average and you get a break and close, your next line of action should typically be to confirm with a higher period moving average, in which case would be the 50. Are you see what I'm saying? I didn't even know, but I this is the typical pattern for every reversal. It will first of all break and close below the 20, then break and close below or above the 20, then go ahead to break above or below the 50 moving average. So in this case, we have gotten a break and close above 20, and we have gotten a break and close above 50. In this case, I can clearly say that this market is reversing and has reversed. Okay, and let's look at what actually follows. Let's look at what follows. Are you seeing we are now having higher highs, higher lows? We're having higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Are you seeing that the market has now, the trend has changed? It was downwards, now it's going up. Is this simple enough for you guys to understand? Any questions on what I just explained right now? Now, any question, any question, any question, any question, any question on this? Any question on this? Because I want to take another example. I'll explain with another example, and that will be all for today. So I'll look for an example that is an uptrend, and then we'll try to find out when it will change to a downtrend. Okay. So if you guys want to suggest any particular chart, you guys can suggest a currency pair that you want me to analyze so that it doesn't look like I'm trying to cherry pick examples. Okay. So if you have any particular currency pair you want us to test this on, so we can test it, and you and I will be able to try to spot it out. Of course, it doesn't happen 100% of the time, but 80% of the time, that's how trends actually change. Somebody saying gold. Why do you guys really like gold? Why do you guys really like gold? Why do you guys really like gold? Why is that? Why is that? Why is that? You guys love gold too much. Why is it like that? Okay. So I don't want to use gold because most times gold is too fast, and gold is better you traded with price action than indicators from my experience. So I don't want to test it on gold. So somebody should mention another currency pair. Somebody is asking that should be entry. So where is exit? So we have this question right here. So now the exit is the same thing with the entry. Now you have entered when the market broke and closed below, moving below, and and there was no significant signs of resistance above the moving average. Now you're going to exit where you're seeing that the okay. Now let's continue with this trend. Let me show you now where to exit. Now we can clearly see the market is still above both 50 moving average and 20 moving average. Let me remove the 50, then let's keep following it with the 20. Let's keep following it with the 20. So at this point, we're still an uptrend. Resistance still happening on 20 moving average, as you can see right here. The market got to 20, resisted. We saw these 2 weeks telling us that there is significant buying pressure here. So let's keep going. Let's keep going. Let's keep going. Let's keep going. Uptrend is still happening. Uptrend is still happening. Uptrend still happening. I'll tell you when to exit. It will be very easy to spot. I think there's not even need for another example. Doing this now will tell you how to exit. Okay, good. At this point, we have a break and close. This is where you should be scared. At least there's no significant pressure here. The market came confidently closed below it. Okay, it's not time to exit yet. This is the point where you move your trade to break even. Okay, this is the time to move your trade to break even. Now let's keep going. We get another break and close, but we're already seeing pressure because what we're seeing now, doji. Okay, we're seeing these two dojis here. Okay, we're seeing blue candles. Okay, another blue candle. Remember that what we are looking for is significant selling pressure. Once we see a significant selling pressure, we can conclude that the buy trend has ended. We are now about to sell, and then you can exit the trade. Okay. Okay, this is where the market is currently. Okay, we've gotten to the end of the market already. So there's no way, there's no place to move forward. Okay, maybe we'll just use another example for this. But what we are typically looking for is where the market break and close below the 20, then goes ahead to break and close again below the 50, and you are not seeing any significant buying pressure anymore. There is no wicks to the upside. There's no wick pushing the market to the upside. That is when you can now exit. Okay, very simple. Somebody is saying Euro USD. Okay, good. Now let's do Euro USD. Let's do Euro USD. Let me scroll all the way back so that we don't get to the front, very easily. Let me scroll all the way to the back, all the way to the back. Let me scroll on 4 hour time frame so that we'll scroll faster. So I'll look for a place where the trend, we have a strong uptrend or a strong downtrend. Insignificant here. Let me check this out on 1 hour time frame. Okay, all right then. Let's do this. Let me delete this guy right here. Okay. So let's do this. Let's do from here. Okay, let's do from here. Good. So as you can see here, from your knowledge of price action, this is clearly an uptrend because we've been seeing higher highs, higher lows, higher highs, higher lows. Okay. Now, please take note. Take note. I forgot to mention this. The fact that you're using moving average doesn't mean that you are now blind to price action. At every point in time, price action is king. I've said that many times in my videos. If you guys have been following me for a while, you guys should know this. At every point in time, price action is king. You can't place moving average above price action. Price action is king anytime, anywhere. Okay, so that does not mean that we are negating price action. We're not ignoring price action at all. Okay, just take note of that. Now we came here and the market, we saw a bounce from the 20 from this 20 moving average. We saw a significant bounce happening on 20 moving average. That means that this 20 moving average is significant, a dynamic support. Okay, this moving average right now is serving as a dynamic support. That means there's significant buying pressure under this moving average. Now let's follow it and see how far we can ride this trend. Okay, the trend is still up, still up. The market got close to this 20 moving average and you can see significant buying pressure. Look at the week, guys. Look at this week. Look at this week. Look at this week. That tells you that there is still buying pressure around this moving average. Okay, so that means we're still on an uptrend. Look at the week. Look at the week. Are you seeing this week? Market came, bounced. 20 moving average and 50 moving average are very strong moving averages. The strongest is 200 moving average, but it takes a while to reach 200 moving average. Okay, now let's keep going. The longer period the moving average, the stronger it is. You guys need to take note of that too. Good. You can see pressure. The market broke and closed below it, but we're still seeing buying pressure. We're still seeing buying pressure. That means this right here is still valid. This is a place where you can significantly, let's say, okay, let's enter a trade here. Let's enter a trade here. Put your stop loss here. Take profit here. Take profit here. Because remember, we're trading the bounce, okay? We are trading the retracements because we are using the moving average to track the retracement. So let's see whether if this works, whether it hits stop loss. Either ways, we move. Okay, typically this one hits stop loss. Let's keep going. Let's keep going. Now, see this break and close above this moving average. Very, very significant. Very, very, very significant. Now, let's keep going. The bounce is still happening. Okay. We were stopped out early on that trade before the bounce happened. Okay. Look at again. The market came. Are you seeing this week? Are you guys seeing this week? Look at this week, man. Look at this week. Look at this week. It shows you that there is significant buying pressure under this place. Okay. Now we get a break and close. So the next thing you're looking at for now, since we have broken and closed, is to see whether whether there is still pressure to the upside. If there is no pressure to the upside, the next thing to do is now put the 50 moving average and look for whether we have broken and closed below the 50 moving average. If we have, then you can actually start selling. You can now see that the market trend has actually changed. Okay, now let's go. Okay, as you can see, buying pressure is back. So that means that this trend is still up. We're still looking up on this. We're still looking up on this. Are you guys seeing? We're still on an uptrend. Okay, we're still on an uptrend. Okay, good. We get a close below it. Once we get a close below it, what next are we looking for? We are looking for whether we still have buying pressure, whether we are seeing wicks to the upside. If there's no wicks to the upside, then we put another moving average, the bigger moving average, which is the 50 moving average. Okay, in this case, there's still buying pressure, so it's too late. It's too early to say that the trend has actually changed. It has not. This is the point where you can now say that you can put a 50 moving average to test for a reversal. Now look at this. Look at this right now. Let me put a moving average on this. Are you guys seeing? From this second red candle, you're seeing that we now have a break and close below the 50 moving average. At this point in time, we can say that the trend is no longer retracing, it is now reversing. This is where you typically maybe typically enter a trade. Let me see. If we hit stop loss, we move. Okay, put TP maybe down to the previous resistance. This is a typical 1:1 trade. Let's see how it goes. Let me zoom in so that we pay attention to the candlestick. Now, as you can see now, it's now bouncing off the 50 moving average, 20 moving average, sorry. Okay, we hit SL on this. Let's go forward. Let me remove the 50 moving average since this particular point did not play out. Now, remember, like I told you guys, it doesn't work 100% of the time. 80% of the time, it works that way. Okay, 20% of 20% of the time, it will actually not work. Okay. Now, this is a very typical example where it did not work. Okay, so what you do is to move ahead, look for another significant, opportunity in the market. Okay, it happens. Now, let's keep going. We're still bouncing off the 20 moving average. Let me remove the 50. The 50 is for confirmation in this case. Good. Look at this. Look at this. We had the first 1, 2, 3, 4 candles closing below this moving average. Typical. Now put a 50 moving average. Let's see. Okay, we are yet to break below this 50, break and close below the 50 moving average. Let's go forward. Good. We get a break and close below this 50 moving average. Now remember that these are dynamic support and resistance zone. That's what we use moving average for. Okay, so typically what I will do in this kind of case now, since we have broken below the 20, broken and closed below the 50, typically what you would do is to just wait for a retracement to happen to any of them, and then you now look forward to bouncing it down, like riding the trend all the way down. Okay, in this case, it even touch a retracement. It's already bouncing off. It's already pushing all the way down. Are you guys seeing this? Are you guys seeing this? If you there is this video I talked about, this one of these live sessions that we talked about how to spot breakouts in the market. I explained how these things happen, why trends like this happen, why this kind of drops happen in the market. You guys should go watch that video. I talked about how this kind of drops happen, how breakouts happen. This is a typical example of what I explained in that live session. Go and watch it. Go and watch it. It's on this channel. Let's go forward. The trend has already changed. We're not able to get an entry in this one. So let's see whether we can typically follow the trend on this one. Let's see whether we can follow the bounce. We just need for this to bounce off one of the 20 moving average, and then we can say we can follow the trend from there. It didn't bounce. Okay, good. We're seeing significant selling pressure on this. Look at all these candlesticks. They all have wicks pushing it down, pushing it down, pushing it down here. So if it's typically me trading this is a good place to actually enter because we're now bouncing downwards because the trend has changed. As you guys saw, the trend has changed. Put TP, let's do 1:1 on this. Let's see whether we get, if we get stop loss on this one, just know that this is bad market and we'll just we'll run away. One thing with trading is that trading is a product of probabilities. Some of your trades will play out, some will not play out, all the same. It's part of trading, okay? So were you guys able to grab this? Were you guys able to grab this? Are you guys able to grab the explanation I made on how to spot reversals and retracements? So it's very, very typical. When you get a break and close below 20 or 20 moving average, for example, then you wait for a confirmation to break and close below 50, in which case you sell. If we get a break and close above 20, you wait for it to break and close above 50, then you buy. Okay, this is typically what we had at this point right here. This is where we got the best example of it. We got a best example of it. We got break and close below 20, then break and close below 20 without any significant buying pressure. As you can see on these candlesticks, there was no wicks on this side, no wicks to the upside right here. We got this big red candle, then a total drop followed it. Okay, all good. So any questions on this so far? Any questions on this? Any questions on this so far? If you have any question, let me know. If you have any question on this, let me know. Any questions? Any questions? Any questions on this so far? Any questions? Any questions on this so far? So good. Now, while we're waiting for questions, next week we'll be discussing a very, very, very vital topic in forex market. This is a topic that I've seen a lot of people make mistakes on. This is a particular topic I've seen a lot of people, confused about, and that's what we'll be discussing next week. Um, Now, this question is a question I get asked every now and then: how to know the best currency pairs for trading the forex market. That is what we'll be discussing next week. Next week, I'll be teaching you guys how to know the best currency pairs for trading. Okay. These guys don't go good though. Okay, somebody is asking about the setting of the moving average. The setting is 20 and 50. Okay, 20 moving average and 50 moving average. That's what I use. Okay. So next week, not next week, Thursday, we'll be trading live on this channel. Set your alarms. Okay, set your alarms for Thursday. We'll be coming on here 1 p.m. live. And if you're not on the Telegram channel, join the Telegram channel because we transition between Google Meet and YouTube Live. So this is the Telegram link. If you're yet to join, this is the Telegram link for those of you that are yet to join. join join the Telegram link, so that every single time that we come on live here on Thursday, you will not be able you will not miss out. Okay, 1 p.m. we're coming on here live to trade again. I'll be calling signal for you guys alongside one of our senior analysts in the market. Then on Monday again, I'll be coming on live here to teach you guys how to identify the best currency pairs for trading. Now, if you want to join our training program, have a full training mentorship program where we teach you how to trade from beginner level, even if you know nothing about the forex market, till becoming a pro in the market. Okay, so the link already. I think I pinned the link earlier, so the link should still be pinned. I don't know. Okay. Yeah, I think the link is still pinned. So that's the link. Trade with www.tradewith.ng. You can check out our mentorship program, how it works, and join us if you want to learn how to make money from the market. Okay, somebody said I use 60 SMA and it's working. Is it better to use 50? Well, 50 moving average is much more popular than 60 moving average, so definitely works better. Okay, 60 moving average. The reason why moving average work, like I told you guys, is because it's popular. The more eyes on it, the more it works. You get, because if people know that if his market is coming to moving average, that it will react there, they are actually maybe buying or selling when it comes to the moving average. So it works better than 60 moving average. Okay. So somebody says, is there no need for somebody when no, I said that's not the truth. I don't know where at what point you joined, but I told you that price action is king. You need to be aware of support and resistance. You can't ignore support and resistance while using moving average. Moving averages are just for confirmations. Okay. Somebody said, my question is, can this settle using an MT5 or just trading view alone, especially using an Android device? Yes, of course, they can be same. Moving averages work the same any device across any device. So it works on any device at all. Okay. Whether you're using Android phone, iOS, MetaTrader 4, MetaTrader 5, moving average works the same. Okay. Okay, the absence of any other question. If you guys have learned anything, let me know on the chat. If you guys are excited, if you guys got any form of value, let me know. Give me some appreciations on the chat. Give me some appreciations on the chat. Let's go, let's go, let's go, let's go, let's go. If you guys, and please like this video. If you're here to like this video, please like this video like right now. Right now, it helps YouTube algorithm to rank videos like this and stuff. So like this video right now so that we can have more people joining us the live session. Everyone like. It's just one button, man. Just like the video right away. Like this video. Great stuff, great stuff. Good to know, man. Good to know. Mozzarella. Good to know. You guys are catching value. So next week we go again. Next week, man, we go again. We're going again next week. It's going to be fantastic. I'll be teaching you guys how to know the best currency pairs for trading and what's time to trade them. So I'm glad you guys are getting value. Thanks, man. Thanks, everyone. Have a wonderful time in the market. I love you guys. See you guys on Thursday. Don't miss. Let's make money on Thursday. Catch you guys and goodbye. Cheers.